Purvis.
Good morning, Chairman Crapo, Ranking Member Brown, my Senator from North Carolina, Senator Tillis, and members of the committee. My name is Chuck Purvis, and I am testifying today on behalf of NAFCU. I currently serve as the President and CEO of Coastal Federal Credit Union in Raleigh, North Carolina. I thank you for the opportunity to appear before you today to talk about the important issue of housing finance reform. At Coastal, we have been offering mortgage loans for 40 years. Until 2008, Coastal held most of our mortgages in portfolio. As demands grew and long-term interest rates fell, we began to work with Fannie Mae to sell many of our loans into the secondary market. Without the GSEs, our capacity to lend in our communities would be outstripped by demand. Our ability to sell loans ensures liquidity, mitigates our long-term interest rate risk, reduces concentration risk, and keeps rates competitive. If not for access to the GSEs, our capacity to meet local demand would be greatly diminished. Consumers would suffer from higher rates and fees, more stringent credit requirements, and overall fewer options. A viable secondary market is vital to our success as a community lender. As a credit union CEO, every day I go to work focused on our members and how Coastal can help put more money in their pockets. For many, home ownership is what they aspire to, and Coastal is with them every step of the way. NAFCU welcomes the thoughtful and practical approach the committee is taking on housing finance reform. We have been active in the housing reform debate and do not believe any proposals discussed in previous Congresses adequately protect the needs of community-based lenders. NAFCU believes there are certain housing finance reform principles that are important to credit unions and should be considered in any reform effort. I outline these in detail in my written testimony, and I would like to highlight a few of the key points here today. Of utmost importance, NAFCU believes that a healthy, sustainable, and viable secondary mortgage market for credit unions must be maintained. To achieve this, credit unions must have guaranteed access to the secondary mortgage market. We believe that efforts to fund any new system must be done in a way as to limit the cost to smaller lenders and not be a barrier to access. NAFCU wants to stress that it is critical that large institutions not be given control of the market. Their market dominance would have negative consequences for smaller lenders. Congress must ensure that does not happen in a reformed system. We believe that any new system must recognize the high quality of credit union loans through a fair pricing structure. Because credit unions originate a relatively low number of loans compared to others in the marketplace, we do not support a pricing structure based on loan volume, institution asset size, or any other issue that will disadvantage our member owners. As such, credit unions should have access to pricing that is focused on quality, not quantity. NAFCU believes that there should be a continued role for the U.S. government to issue an explicit guarantee on the payment of principal and interest on mortgage-backed securities. The explicit guarantee will provide certainty to the market, especially for investors who will need to be enticed to invest in mortgage-backed securities and facilitate the flow of liquidity through the market. We do not think that the GSEs should be fully privatized at this time. The transition to a new system should also be as seamless as possible. Credit unions have uninterrupted access to the GSEs or their successors and the secondary mortgage market as a whole, in particular through the cash window and small pool options. Our partnership with Fannie Mae is critical to Coastal's mortgage lending function. Our use of Fannie Mae's desktop underwriter on all mortgage loans that we originate ensures conformity and consistency across our portfolio, whether we sell the loan or not. Access to such technology must be preserved in any reforms. Finally, any new housing finance system must ensure credit unions can retain servicing rights to loans they make to their members. Our members turn to us for lower rates and fees, and because they want to work with an organization they trust and know will provide them with high-quality service. At Coastal, we retain servicing rights on all of our loans. This was especially beneficial during the financial crisis, as it allowed us to work with members on their loan to keep them in their home. In conclusion, credit unions exist to provide provident credit to their members. It is vital that credit unions continue to have legislatively guaranteed access to the secondary market and fair pricing based on the quality of their loans. Thank you for the opportunity to provide our input on this important issue, and I welcome any questions that you may